Good morning, student. Now we will see some more concept in the journal. In the previous lecture, we have seen bad debts. Now means if any customer not pay the money, that is called bad debts. But sometimes it happens that after few months or few year, that person has earned the money and they come to return back the money. In the business, this is always happens. Normal life you not see, but in the business, if your nature is the polite and when he has not paid, you have not create any types of dispute, it is sure that after few years he will come back and return your money. That is called back debts recovery. In that case, when you will receive the income, this is called the bad debts recover, and now you will receive the cash. So cash will be debit, cash account debit to bad debts recover account. Now outstanding expenses. Outstanding expenses means expenses related to your accounting period but it is not paid. Suppose your firm is running in a rental shop, you have to pay the rent 10,000 per month. Till March, this is the 12th month, but due to the lockdown, the payment of February and March you have not paid. Only 10-month rent you have paid and 2-month rent are unpaid. So these 2-month rent will be called outstanding. So in case of outstanding is your liabilities, that is always credit, and that expenses will be always debit. So you will pass the entry for this expenses name account debit to outstanding expenses name account. For example, it is the rent outstanding. Then you will say rent account debit to outstanding rent. If it is salary outstanding, then salary account debit to outstanding salary. If this is the interest outstanding, interest account debit to outstanding interest. So in the place of expenses name, you will write the name of the expenses, rent, wages, salary, etc. Interest on capital. Capital is considered as internal liabilities for the firm. Now firm has responsibility to return this capital to the owner. So on this money, the firm pay the interest also. And for this, you will pass the entry interest on capital account debit to capital account. Interest on capital is the expenses for the firm, so it will be debit. And capital is always considered liability, so it will be credit. Next is the interest on drawing. On the same concept, if the owner has withdrawn the money for personal use, this is like an investment for the firm, and firm has right to take the interest on this amount, because the firm is going to pay the interest on capital, then the firm will take the interest on drawing. So this is the income for the firm, and for this you will pass the entry drawing account debit to interest on drawing account. So drawing is the owner's account. So some places, in the place of drawing, if anyone write the capital account debit to interest on drawing, that will be also considered correct, because drawing at last transferred to the capital account, capital debit to drawing, so drawing converted into the capital. So in the place of drawing, if anyone write the capital account, that is also the correct one. Next is the prepaid expenses. Prepaid expenses means expenses paid in advance. When you make your mobile recharge, this is called prepaid recharge or postpaid recharge. If first you pay and after then make the consumption, this is called prepaid. And first you make the consumption, after then you pay, this is called postpaid. So in the case of prepaid, your money is deposited with the other party. So this is the prepaid expenses is like an assess for you, and all the assets are always debited. So prepaid expenses account will be debit. To cash account. At the end of year, if you are going to make the adjustment of the expenses as a prepaid, in that case you will write to expenses name account. Normally if it is written rent paid in advance, then you will pass the entry prepaid rent account debit to cash account. Rent paid in advance, then you will pass entry prepaid rent account debit to cash account. But if you have paid the rent, or at the end of year you find that 3-month rent is the advance, then in that case 3-month rent, for the 3-month rent you will pass the entry prepaid rent account debit to rent account. Next is the earned income. Earned income means the income which is related to your accounting period but you have not received. That is called earned income. So income is always credit. So you will pass the entry earned income account debit to income name account. For example, interest on your bank deposit. Now you are seeing that is the interest account is credited there. You will write on interest account debit to interest account. Next, income received in advance. If you have received the income in advance, this is a liabilities for you. Suppose you are giving your house on rental system. Now you have a policy that every person will pay 3 month advance, then you will give your room. Now you have taken the 3 month in advance. Anytime he can give you notice that he not wants to stay there, so please return his money. So this is the liabilities for you. And so advance income is liabilities is credit, so advance income will be always credit. So income name account debit to advance income name. Like such, you have received the rent in advance. So rent account debit to advance rent account. You have received the interest in advance. Now interest account debit to advance interest account. So you will write the name of income. Next, carriage paid on SS, installation charges, repair made on purchase date. All these are considered as a capital expenditure. So in this case, you will debit it to that SS account, and you will pass the entry SS account debit to cash account. SS account debit to cash account. For example, you purchase the bike, a second hand bike for 20,000, and after purchasing same day you make some repair. Before using, you make the repair on this bike of 10,000. The cost of the bike for you will be 30,000. So for this repair, you will say bike account debit to cash account. You will not say repair account debit to cash account. Now, if you will sell the goods, then sales account will be credited. But for any other purpose, goods are going outward, the purchase account always will be credited. Like such, goods destroyed by fire. In that case, the goods will be reduced one, so purchase account will be credited. Goods distributed as a sample, goods will be reduced one, so purchase account will be credited. Goods given in charity, goods will be goes out, reduced one, so purchase account will be credited. And that particular account will be debit. For example, goods destroyed by fire, so this is called loss by fire account debit. Secondly, goods distributed as a sample, so advertisement account debit. For example, goods given in the charity, so donation account debit. And in all cases, the goods are goes out, so to purchase account. So you will see some new concept will always come, and now time to time I will explain them. After these we will again see some numerical related on these concept. Thank you, student.